So hi guys, in this video we would be learning how to find undervalued companies with the help of Screener and AI. Just a short note that this video is purely for educational purpose. Kindly consult your financial advisor before making any investment decisions. So firstly we would be going to Screener. Now we would go to screens and now we would be creating a new screen. Now here we would be writing filters in order to find undervalued companies. So first will be price to earnings has to be less than that of industry PE, and return on equity has to be greater than that of 15%, and debt to equity has to be less than 0.5, as we are completely looking for debt free companies. Now profit growth, let's say profit growth has we are taking a minimum benchmark of 3 years, so profit growth has to be minimum of 12%. Similarly, sales growth also we will be taking 3 years, sales growth has to be a same 12%. Now we would be taking cash from operations last year has to be positive, so greater than 0, and market capitalization, let's say market capitalization, let's take 1000 crores, and current price has to be less than that of, let's say, 50-day moving average, or let's do it 200, let's do it 200-day moving average. Yeah, so these are the filters that we had entered. And just a short note that write and beside every filter so that all the filters will be taken into consideration. So now we would be running this query. Okay, so there are currently 49 results and 2 pages. So let us kindly filter some more. So from market capitalization from 1000, let us say we are going to 50,000 crore market cap. Let's see if there are any results or not. Okay, so there are only one result, which is ICICI Lombard. So let's just go and analyze. So first we can already see that the market capitalization as criteria has been fulfilled, as they have 91,000 crore market cap, and face value is 10 per share, and debt to equity is 0 as it is a debt free company. So now in the price we can also see that yellow line represents 50-day moving average and a black line represents 200-day moving average. So the line is the current price is slightly above the 50-day moving average, but lesser than that of the 200-day moving average as the criteria that we had entered in the filter. Now under pros we can see that the company is almost debt free and they have a healthy dividend payout of 25.7%. And the con, as of now, it is blank, so I'm guessing there aren't any cons. So ICICI Lombard, so this is the peer comparison, which if you look at the PE, then the PE for ICICI Lombard is 32.89. However, the median of these 6 companies, their total industry PE is 43.14, which suggests that it is undervalued. But however, we should not only look at from the PE point of view, other factors should also be taken into consideration while analyzing a company. Now let's moving to the quarterly results. So we can see that in sales there is an increasing trend in sales. Now operating profit, however, for the last 2 quarters, operating profit has decreased, as we can see in the last 2 quarters. The profit before tax, the same effect has been seen in the profit before tax and net profit as well. Both have been decreased in last 2 quarters, which may be a reason that the price is currently below than that of the 200-day moving average. However, I have not completely analyzed the stock. So now moving to the sales. So as we can see that there is an increasing trend in sales, and here we can see that there is 31% growth of sales in 22, 11 in 23, 15 in 24, 16 in 25, and 12 in 26, which suggests that averagely sales percentage growth will be greater than that of 12, as we are entered in our filtering criteria. Now operating profit is also has increased, however, year on year, in despite of the company performing not that good in the last 2 quarters. The operating profit has increased, so there is no effect. Similarly, there is no effect on that of the profit before tax and net profit as well. Now the EPS, as we can see, as of latest, there is 55.61 per 61 EPS, and dividend payout also. The company has repaid dividends almost every year. Now we move on to balance sheet. So balance sheet, we are seeing that the equity capital as of latest is 498 crores. The reserves are continuously increasing. Borrowings, as it is a debt free company, as of the last 2 years the company had zero borrowings. Now the other liabilities, total liabilities. Now investments, the company is heavily investing currently. And total assets, the cash flow from operating activities, we can see the receivables, payables, they're also paying back. Cash flow from investing activities, fixed assets purchase, investment purchase, the company is heavily investing, and also they are selling their investments as well. Now cash flow from financing activities, as we can see, the interest paid to finance, repayment of borrowing, repayment of shares. Promoter is currently holding 51.28% as of March 2026. Financial institutional investor is holding 22.9%, out of whom there is government pension fund global, first sentient investors, government of Singapore has also invested. Domestic institutional investors, some of the notable names are ICICI Prudential Mutual Fund, SBI Mutual Fund Trust, KMNPS Trust, Kotak Mutual Funds, and all. So now let's move on to Claude. So firstly, we would be going to Claude. So in order to get accurate results from Claude, what we will be doing is we would be downloading this Concall PPT. Yes, I would be saving it. Now we would be writing a prompt. Firstly, we would be writing graphically present as present, as it is much more convenient for visualization. Present and analyze. ICICI Lombard looks undervalued or overvalued based on PE, price to earnings ratio, growth ratio, return on equity, debt, industry comparison, and future growth potential. Also explain if it is a value trap. Give a final verdict on whether one should invest in this company or avoid. Also make scorecard for easier understanding. So this is the in detail prompt that we had written, so that and also we had attached the last concall file so that it can easily analyze it and give us the most appropriate response. So this is the final result that Claude has given. So firstly, we can see that the share price, PE ratio, PB ratio. So here they are justifying PE ratio as 44% more premium than that of the peers. So here is the PE ratio history versus current. So orange line represents the peers PE ratio, and the blue line represents the Lombard's PE ratio, as it is stating that it is slightly overvalued than that of the peers PE ratio. Same trend there is being showing here as well. They are suggesting ICICI Lombard is slightly overvalued, but however, in the screener, as if we can see that the peer comparison, the PE of Lombard is 32, but however, they are showing a median of 43.14, which suggests that the peers that they had included in here, Claude and that of the screener, are slightly different. So it's very important to do your own research and go through the documents if you are truly investing in thinking of investing in any of the companies, because AI can give you an overall brief idea, but it's useful if we go and do a deep dive ourselves. So this is the future growth potential they are saying, and it is saying an auto value trap, and here are the reasons. And if they are also stating value trap warning signs, which is GDY growth slowed from 7% versus 9.2% in industry. PE is 44% above the sector median. Price per perfection combined ratio is greater than 100%, means underwriting had a loss. So I'm also in the prompt written to generate an investment scorecard as well, so that it would be easier for understanding. So here is the final scorecard that the Claude has generated, which is valuation. They are rating it expensive valuation, and then earnings growth consistent, but the earnings have comparatively slowed, and return on equity, which is 17.8%, which is well above peers. That's why they have rated 7.2. And debt to equity, as it is a completely debt free company almost, so it is 8.5. And competitive mode, large private brand, that's why they have given it 8. Future growth potential 7.8. Unpenetrated market, there is a lot of unpenetrated market as well. And management quality, 10 years CAGR track record. Near term risk, COR is greater than that of the 100%. GDPI lag, etc. Overall, they are stating as cautious buy, strong business quality, but the current price already reflect more positive. Best entry at 10 to 15% correction from current levels. So this is the final word, and also they have stated a final verdict. So this is the final verdict that the Claude has generated based on the prompt that we had entered and the presentation that we had attached. So before I close this video, I would just like to say that the videos that I'm making are purely for educational purpose, so that we both can learn from these videos. And that is all for the today's videos, guys. Hope you find it helpful. See you. Thank you.